Right, we have transferred all of the details relating to our hand sanitizer plant to our PPE note. Okay, so before we move on, let's just recap. What do we need to do? We need to prepare our PPE note. And within our PPE note, we have to include our impairment. Therefore, we need to perform our principles of IFRS 36 and we need to test for impairment. Therefore, we need to focus, guys. We need our PPE note, but to be able to complete this, we need to determine the impairment. And this is a CGU, and you will remember that we did include steps. Now, you'll also remember that I do prefer to make use of a table. Therefore, before the impairment and after the impairment. Right, okay. Now let's move on. We've transferred the hand sanitizer plant's details. And we now need to look at the China International Manufacturing Project. Now this is our CGU. Okay, so when we look at this, guys, the first two paragraphs, background info only. The third paragraph, this is where we've identified that there's an indicator and we need to test for impairment and that this is a CGU. They indicate to us the list of assets and liabilities included in our CGU. Okay. Now, before we move on, I want you to please refer to your IFRS 36, paragraph 2. This is the scope. Remember, you need to be able to identify what will be included. Now, listen to me carefully. 1, our CGU will include all of the assets and liabilities listed. You with me? But for testing purposes of impairment, number 2, the CGU, the impairment, you need to remember that there is a scope in IFRS 36 that indicates to us the following. IFRS 36, paragraph 2. This standard shall be applied in accounting for the impairment of all assets other than. Therefore, the following list of assets, we will have to follow the rules of these assets. A, inventories, IFRS 2. B, contract assets and assets arising from cost to obtain or fulfill a contract that are recognized in accordance with IFRS 15. C, deferred tax assets, IFRS 12. D, IFRS 19. E, financial assets that are within the scope of IFRS 9. F, investment property measured at fair value. G, IFRS 41. H, IFRS 17. And I, our IFRS assets. Therefore, these assets, when we measure, and this is the importance that you need to ensure you understand, when we measure the assets, we need to follow these rules. Therefore, when we look at the list of assets and liabilities, in terms of our land and building, we need to determine, remember, if this is at cost or not. We have our plant. We have already recognized, in terms of the plant, the PPE note section, the additions and depreciation, but we still need to identify if there's impairment. Inventory will follow its own rules. IFRS 2, trade receivables, IFRS 9, IFRS 9. Right, okay. Now, we know that this is our CGU. Can you remember your steps? Remember, this is included in your notes. In terms of a CGU, our first step, we need to calculate the carrying amount of our CGU. In our CGU, there can be liabilities, goodwill, which we don't have, head office costs, which we don't have. Step 2, we need to calculate the recoverable amount. Step 3, identify if the carrying amount exceeds the recoverable amount. And step 4, allocate the impairment to the separate assets. But remember, guys, we can't allocate to our liabilities, right? Because we still have to pay the liabilities. You with me? Okay. Therefore, on a new page, and this is my sequence in terms of my calculations. Remember, I had calculation number 1, which is my plant. I've included calculation 2, land and buildings. We will look at this just now. And then on a new page, I will indicate that this is my impairment calculation. Now, remember, they've provided me with a list of assets. Now, guys, you don't have to write out all of this. You don't have to write out land, buildings, plant, IFRS 1, inventory, debtors, credits. I do this for you to be able to follow me. My recommendation, in your workings, use abbreviations, please. Your marker should still be able to follow your calculations, but use abbreviations to save some time. Then I have this 31 December 2019 before adjustments. I have my adjustments column, I have my after adjustments, and I have my impairment and my carrying amount after adjustments. Now guys, this carrying amount, I sometimes don't always complete. This is just for my own sanity, okay? Because if I'm able to transfer my impairment to my PPE note, the carrying amount in my PPE note should be correct. Therefore, from a timing point of view, just ensure why you do this though, okay? Now, let's refer back to our scenario, and we need to look at land. Land, the indicator us, referred to note 1 in terms of the cost and the carrying amount at year end, note 1. Building, note 1 and note 1. Therefore, remember our steps. We need to determine the carrying amount of our CGU. Therefore, to be able to do this, we need to determine what is the carrying amount of all of the assets above. Right, okay. Now, land and buildings. Property A consists of land and buildings. This property is close to Medex current premises and was acquired on 1 January. Medex has been leasing the entire property A to a tenant since the company relocated its own business operations to property B on 31 December 2016. Okay, so level 1 students, don't freak out guys, it's not that difficult. You will identify the sufficient marks in the solution for you to be able to pass the question with the knowledge that you do have. Okay, now when we look at this, they indicate to us a revaluation surplus amounting to 60,000 was recognized on the land of property A on 31 December 2016. Remember, this is now when they've transferred this from PPE to investment property. Okay, therefore, on my timeline, and this is my calculation number 2, I have included my acquisition date 1 January 2016. They've indicated to me that there is a revaluation surplus of 60,000. Okay, our year end is from 1 January 2018 up until 31 December 2019. Therefore, we need to prepare the details in terms of this yellow section, right? Then they indicate to us that on 30 April 2019, they have informed the tenant, look at this paragraph guys, above the table, since Medex plan to use the premises. Therefore, this is investment property. Now this will be PPE. The new sanitizing plant, the tenant was given an official notification to vacate the premises. Therefore, on 30 April, now for our level 2 students, if you're not sure what to do, you open your contents page, IS40, you identify where's the transfers section, paragraph 57, and you open this and you identify that we need to transfer the asset at fair value on that date, right? Okay, so when you now look at this on 30 April 2019, therefore this asset, if we look at our timeline, this asset was investment property for this section of the year, and the asset will now be PPE for this portion of the year. Therefore, we need to transfer our asset at fair value. Now, I have transferred the details from the table provided to us. Therefore, when you look at my timeline and the details and compare this to the table, we have a carrying amount on 1 January 2018 of 2.1 million for our land and 2940 for our building. On 1 January 2019, 2.1 million land and 288,000. Now remember, we don't have to include our comparative figures, therefore please don't waste your time. And then we have our fair values of our land and our building. Therefore, the fair value of 2040, guys, look at this. 2040. Therefore, we need to transfer our asset at fair value into our PPE note, right? And in terms of our building, we need to transfer the building at fair value 288,000. Our PPE note, transfer of investment property 2040,000 and 288,000. Okay. Now, when we look at the details provided, we have transferred the land and buildings to our PPE, and they indicate to us that the useful life and residual values of the building remained unchanged. Therefore, we know that we can determine the depreciation. When we refer to our calculation, we need to calculate the depreciation for this period, guys. Look at my timeline here. Therefore, for this period from 30 April 20.19 up until 31 December 20.19. Therefore, this will be for a period of 8 months. Okay, now we need to calculate this. We need to use our new value with the 2880, our new value, minus our residual value. Remember, they've indicated to us in the given scenario that our residual value is 336,000. Therefore, minus the residual value, divide by our useful life. Now, the original useful life is 20 years. Look at this, guys. The original useful life is 20 years. Therefore, on our timeline, on 1 January 20.16, we have our 20 years. You with me? Okay, so 1 year has passed, another year has passed, another year has passed, 3 years, and then 4 months has passed. Therefore, this will be 40 months, right? Therefore, we need to use the 240 months minus the 40 months past and times by 8 months, and this will be a depreciation amount of 101,760. Therefore, let's immediately transfer this 101,760 to our PPE note. Depreciation, buildings, 101,760, and I'm going to reference this my calculation 2.1. If we refer to the calculations, this is my calculation 2.1. Right. Okay, but what do we need to remember? We still need to prepare our impairment calculation. Now, to be able to do this, we need the carrying amount of our building before impairment. Therefore, this will be the 288,000 minus the 101,760. And our carrying amount for impairment purposes will be an amount of 2778,240. Now, this is before impairment. Okay, I'm going to transfer this to my calculation, my impairment calculation. I'm going to reference this calculation 2.2, and I need to transfer this. In my buildings column, this is an amount of 2778,240. Right, okay. Now, let's refer back to our given scenario, and we can tick off that we have determined the depreciation. The indicator has the following fair values relating to land were determined on 31 December 20.19, our year end, in accordance with IFRS 13, right? For our level 2 students, you need to identify that we need to use the standalone basis amount 198,000. Okay. Therefore, when you refer to our calculation, at year end, the value of our land is 198,000. Okay. Therefore, we are able to identify in our calculation, and I'm going to call this my calculation 2.3, that there is a decrease of 60,000. And this is an impairment in terms of our asset. Right, you with me on this one? Why? Because when we look at this, guys, they've indicated to us that our land will be based on the revaluation model. And they've indicated to us that there were a previous 60,000 in our OCI. Therefore, we need to identify that we can use that 60,000 and we can allocate. We have to. We don't have a choice, guys. We first have to allocate this revaluation surplus to that 60,000 in our OCI. Therefore, in our PPE note, I need to include this, and this will be a revaluation deficit against the OCI account. Please write this deficit out, guys. And this is the 60,000, and this is our calculation 2.3. Right, therefore, we are now able to tick off this section in terms of our land and move on to our inventory. They indicate to us in terms of the inventory, remember, we have identified I is 2 and we have identified that we need to use the separate rules of I is 2, and they indicate to us on 1 July 20.18, they signed a non-cancelable 2-year contract. Guys, just something important. If you look at I is 37, this can be an onerous contract as well if there's a loss though, hey? Okay. With Medex-Part to supply the company with 10,000 litre sanitizer each month at a fixed price of 13 Rand per litre for the first year of the contract and 14 Rand 50 per litre for the second year. Okay, now bear with me here. 13 Rand for the first year and for the second year 14 Rand 50. Therefore, this is the selling price. Now, as part of my impairment calculation, I'm going to call this here calculation 3.1, and this is my inventory. Now, guys, you could have used calculation 4. We don't mind. Now, we need to ensure that we understand the given scenario. Right, therefore, when you look at my timeline, remember, we need to focus on the 31 December 2019 year end. Therefore, this yellow section, okay, you with me? They've indicated to us that as per the contract, for the first year of the contract, which will be from 1 July 20.18 up until when? This will then be 31 July. Now, guys, I'm lying. 1 July 20.18. This is the first year of the contract. Okay, they can sell this at 13 Rand per litre. Then for the second year of the contract, which will be that portion, they can sell this for 14 Rand 50 per litre. Let me just take out this 1 August here. It's going to confuse us. Okay. Now, when we refer to our scenario, they've indicated to us for the first year of the contract, they were able to purchase these goods at a fixed cost of 12 Rand per litre. Therefore, for the first year of the contract, okay, 1 year. And then they indicate to us, due to unforeseen circumstances, the supply was liquidated after the first year of the contract between Medex and Medex-Part. Medex had no sanitizers on hand at 31 July 20.19. Okay, so for the first year, they've purchased this at 12 Rand. And then on 1 August 20.19, Medex purchased all required sanitizers for the remainder of the contract. Okay, therefore, for the remainder of the contract, a little difficult here, guys. When you look at this, they indicate to us for the first year they were able to purchase this at 12 Rand. But then they indicate to us that they had no other sanitizers on hand end of July 20.19. And then on 1 August 20.19, they've purchased the sanitizers at 17 Rand 50. Therefore, when you look at this, for the first year, we were able to purchase the stock at 12 Rand per litre. For the second year, at 17 Rand 50 per litre. Okay, so what I want you to identify here, they've indicated to us that at the end of 31 July, they had no more stock. And they've purchased the stock from 1 August at 17 Rand 50. Therefore, based on the scenario, I will assume that they most probably still had some other stock that they could sell. And therefore, I'm going to calculate the adjustment only for the 5 months. But you will identify in the solution that if you have used 6 months, we have also allocated marks. Okay. Therefore, when we look at this, our selling price of our inventory is the 14 Rand 50 times the 10,000 liters times 12 months. And this will be an amount of 725,000. Right? But the cost, our purchase price, is the 17 Rand 50 times 10,000 times 12, and this is an amount of 875,000. Therefore, we have an adjustment of 150,000 to our inventory. Right, okay. Therefore, we need to adjust our inventory. I'm going to transfer this to my table. When I look at my inventory, guys, this is an adjustment of 150,000. And this is my calculation 3.1. Okay. Now, in the scenario, they've indicated to us when we refer to the table that our inventory had a value of 3936. Therefore, I have transferred my inventory 3936. I've adjusted this with 150,000, and I have an amount after my adjustment. Okay, right. Therefore, guys, we can now move on to the next paragraph. Identify. I have not yet ticked off land, buildings, plant. Okay. We can tick off inventory, yes, because we have transferred this to our impairment calc. Now, the next paragraph, tick off my inventory.